All right, for our first energy stock, we have Valero. Now, Valero was looking great. I mean, it makes sense. We hit the resistance right here at the 100%. We look basically a breakout, fake out, kind of rolled over, attempted on Thursday to break out again, but then Friday basically got destroyed. But if you look over here on the 28th of May, we're basically touching support, right? So it's kind of like the breakout. We break out of down here, we get stopped right here, and that's where we are right now. So let's check out the open interest. See if there, ooh, look at this. A couple hedges, right? But look at this big money right here at 85. 17,000 contracts at 85. And I'm reading this new book at unusual option activity, so I'm all interested about it and just trying to spot different things and things that look interesting to me. So that's what we're going through this week, is just different opportunities. If I enjoy looking at it, if it's still interesting to me after, then it'll be something that we're gonna just continuously do, is look at that, see if we can find crazy option interest in the stocks that we go over. Now, if nothing comes to fruition of this and all of it's just noise, then obviously we'll just go back to analyzing the stock. But the option market looks very interesting. Plus, it's kind of fun. I don't know. Maybe it's not to you, but it is to me. So we have 17,000 contracts saying 85. Let's see. Does this 85? It does, because 84.95 is the high. You see? Now, if we have 92.43, I don't know what this one is, but if it's anywhere close to 92.43, it would make sense. That's 90. So we have 10,000 contracts at the 90, and then then it just kind of jumps 95, 100. Now I don't see it going all the way to 92, but there's people out there that are saying it's going to hit this 90. 17,000 contracts say 85. So between the 85 and the 90, there's 7,000 excess contracts, right? There's 27,000 contracts in total. However, there could be a decent spread, 85 to 90. Although it's I don't really see why you would do that, because it's not like you're lowering your costs by a lot, but we're also talking about 10,000 contracts. You know what I'm saying? So 4 cents on 10,000 contracts is quite a lot of money. Um, but buying one or two of them, what I'm going to do isn't quite uh, hefty. But yeah, look at this, 15,000 people bought the 80s. Okay, look at this. Look at this. So this looks like it's a butterfly. Kind of. I don't know. It's just interesting because it's five strikes basically in between the 80s, the 85s, and the 90s. 15,000, 17,000, 10,000. So if you were to go, let's say 7,000 at no 15, because then that would mean that there's 30,000 at the 85. They got something set up here. Let's look at the next week. If there is there anything huge? No, there's nothing. Option expiration, monthly expirations. Yes, so we look for the monthly you know what I said. Monthly option expiration. So we're looking VLO, Val. This is money play. The 17s, 85 slash 90. All right, I'm sorry, I didn't do the oil, so we can kind of check the oil. Now, this is, I don't know. So I made these videos, today's Monday morning. I made these videos yesterday, made them all, was all excited about them, and realized that I had no sound. So I'm having to redo the videos at first thing in the morning on Monday morning. So that's why the oil market is moving. Now, the VLO going into Friday would probably not make any sense, but when we're opening up almost 1% on the oil, which is just massive. Again, watch out for the 73.45. That looks like where we're going, 73.45. Let's go into the quarterly, 20-year quarterly, because that's where we kind of have to go back. Next resistance again, if we need to break out of October 2018 high, which is 76.90. 76.90. Now, and it closed that same quarter, these are 3 months, at 45. So that was a massive, massive drop. If you see it, it was from July 17 up to basically 18, April 18. So that's 3, 6, 9, 12, for almost a whole year, right? It was an upward trajectory, kind of how it is right now. Hit that number and boom, then Corona happened. Boom. So this is enormous. Need sorry, I got a message. There's going to be enormous selling pressure at this number. Now, of course, they're going to say something stupid about the news and all this other kind of stuff, right? That, oh, the Iran whatever, that has nothing to do with it. It has everything to do is we're getting close. I mean, it probably does a little bit, but we're getting close to super resistance, right? If we can break past that, then the next is literally top of this massive 2014 drop. 2014 drop, which is the high of this was 92.96. So did we see this? We break this, our next target is literally 88 to 93. So this is huge. I'm also expecting a pullback. You know, let's go back to days. So we have had pullbacks. So don't get me wrong. I am expecting a pullback back to 66.77 at some point eventually. When will this come? I am not sure. But just be careful and watch that after we hit the 73 in one day, it could drop back to 66 just to shake everybody out. And their Iran news could do it, right? Shake everybody out, get everyone scared, and then let's go higher. But it looks to me that we're positioned just to take out the 18 high. All right, Exxon Mobil. Now all these are going to be the same. We got destroyed. We kind of got hit hard, right? We got 50 percentile, and then we got kind of rejected, which makes sense. We're gonna need something powerful to break out of that 64. But see, this is what sucks. We already know oil is gonna pop up 63 cents on Monday morning because it's already up 63 cents on Monday morning. So it's basically kind of cheating, right? I don't like that. I'd much rather go into it without knowing what the oil market's gonna do on Monday morning. So because not this, what could easily happen is the market reverses. So everything that I say right now could be reversed. That's, you know what I mean? Does that make sense? That's why I would have rather just done this before the market opens, because it's giving us a false sense because it's the European Open's opening right around now. But let's check out our options. Ooh, See, I mean, this is weekly options or monthly options. 20,000 at the 60. But look at the big number over here. We got 33,000, 13,000. The 30, excuse me, the 33,000 is interesting at 65 because it's really not any money. It's only $3 out. Let's look at this. How much can this bad boy move in 5 days? 1, 2, 3, 4, 5. Whoa, that's a big difference in that one day. 8%. Man, this is like the financials. 8%. So obviously that's 7.5%. But a 7.5% pop from here brings us to 66.8. Let's go look over here. 66, 68. See, that's right into that 65. So, whoa, there's a buku amount of money. And if it does hit the 8%, then those 10 cents turns into $2 or $3. That's enormous money right there. Very interesting. You're only paying 10 cents, 9 cents or 9.50, right? That's, I mean, your deltas are, there's a 10% chance for that it's gonna go into money, whatever. Um, yeah, the money play. 65 and then 70. I don't really see 70. 70 is kind of stretching it. Because 70 means we come all the way up to here. What is 70 from here? It's a 12% gain. Hmm. A 12% gain in literally you're paying a penny for it. So it's almost hard to say no. $5, you got 5 contracts, well, it'd be like $6. That's hard to say no. Let's see, because there's 13,000 contracts that say that this could happen. All right, MMP. I am in love with this stock. Keep going. Keep going. Pays well. Pays good dividends. It's all cylinders. Let's go. This is more of a long-term play. I would buy out turn out of money long-term options, or if you want to capture your delta at 1, then go in the money. But if you see since March, this has gone straight up. It is beautiful. Let's see how much can we move in a week. 5%. What do we got over here? Oh yeah, there's very thinly traded options on this. Yeah, no one's paying attention to this. Look at the 55s, right? The 55s, even the 52. 52, you're already in the money. Like you're literally already in the money. Extrinsic 25 cents at the 52s, right? That's not honestly, this isn't. I mean, the options kind of suck, all right? Don't get me wrong, because they're just weird. There's nothing out there, but there is decent numbers at the 200 at this right here, the 55. Also at the 47 too, 6 point drop. But you're not paying anything for this. You're paying 7 cents for 55. What could this do? It moved five. The largest it moves 5% gain. 5%. You're at 6. 4.8%. Like basically, a 5% gain is $2.69. 56. So this has potential to get to $1 if we have a massive move. Um, that's 7 cents is hard to 7 cents turn into $1. That's 13 times your money. That's hard to say no to. The money play. The money play. We're looking at MMP. Money play. That was 55. Yeah, basically 55. Because you see there's literally no volume anywhere. You're paying more. There's more extrinsic value the further out you are. Right? Does it make sense? So you're inverted. Actually, literally, you're negative in, well, right here, you're paying 25 cents of extrinsic value at 52, but at 55, you're paying 7 cents. Now I know and it's almost like right in the middle. So you're paying a lot of extrinsic value for the 52s when you're paying 7 cents for the 55s. You're not, it's just, again, my money plays are gambles. Straight up gambles. We're just having fun. Sunoco is another one. All cylinders, beautiful, absolutely beautiful. Uh, Load up on your portfolio. They pay great dividends. I made a different video today on which was better, cryptocurrency or Chevron. And Chevron destroyed them, right? For the amount of money I have in Chevron compared to the cryptos, Chevron destroyed it. But I should have done Sunoco because Sunoco is even better. Sunoco is ridiculous. Yeah, I don't know what else to say about Sunoco. Pull back so I can get more, right? Like your breakout right here of 36. It's only 2 points, but my goodness, it is just up and goodbye, right? Up and goodbye, which is another one. If you want a smaller, less price one, go here, because this is up and goodbye, just the same. And in energy transfer, I would say they have a. It's basically the same company in a sense. It's very different company, so don't think it's the same company, but it's a lot of the same company because ET owns a lot of Sunoco, right? So if Sunoco does well, ET does well too. And it's way less priced. It's priced at $11.30 opposed to what is Sunoco 38. So let's look at Sunoco. Sunoco. See, the thing with these oil stocks is nobody's paying any attention, right? Not at all. As you see, like they got a whole bunch of put interest. So I mean, they're betting that that oil's about to get destroyed this upcoming week. But because there is nothing. You got 3 at 42. Well, that's also pretty far out of the money. We're looking at $2 away, and there's 300 contracts $2 away, and you're literally paying 2 cents for it. Again, this is very difficult not to want to gamble the 2 cents. Let's see what's done in a week. 1, 2, 3. Let's go. 1, 2, 3, 4, 5. So we ended up right here. 4.8%. 4%. We're looking at 40. 4.8. We're looking at 5%, 5.6%, 40, 57. So when you're coming over here and you're analyzing the 40s, that's why the 42s, there's only 3 people. There's like, yeah, that's not going to go there. That needs too much of a bump. But when you're looking at right here, the implied interest is super low. My goodness. Implied volatility super low. They're banking 64 cents for the week. Yeah, I mean, this is a pure gamble. The 40s, pure gamble. But you got a high probability that this might do something. Look at your delta, 6 cents. So your delta, wow, what is going, this doesn't make any sense. I bet your gamma's pretty high too. So what basically what that means, there's not very much volume on this, so it's probably not, and the implied volatility is really low. So it's not going to have the gamma spike won't gamma and delta won't really change too much. However, look at this. Per dollar movement in is 83 cents. This is 6 cents. Man, oh man. Yeah, there's high probability that this 5 cents or 2.5 cents, which is extrinsic right now, which at most will probably be 5 cents. Well, come Monday morning in a couple hours, it's going to be more. But just look at this, because if oil has a little bit of a crash and it comes back, these are going to be dirt cheap. Even the 3750s are probably going to be like dirt cheap, because what you're paying 5 cents of extrinsic value in the money. Look at this. You're paying, this doesn't make any sense. If you were to go, well, oh, that makes sense, because it's not, everything's closed, so that's why. But we have to look at these numbers again when they open up. But I mean, there's the decent. You're not paying and you're not paying up on these options at all. That's what I'm basically saying. Like, your extrinsic value is nothing. Nothing. All right, let's see. That was Sunoco. Royal Dutch. I like this as for like an iron condor. Now, if the rest of the oil kind of breaks, your iron condor might not work for this one, because the rest of the market just broke on you. But I like selling. Yeah, actually, the iron condor, I'd still go for it. Just kind of skew it to the bull side, so you might want to give yourself a little bit more extra space on the bulls. But let's look at the numbers. We got 3,800 contracts at the 42. Yeah, so that's like right around here. Um, yeah, I mean, we could get up to 43 again. I just don't like this stock at the moment. It's not in my favor. But a breakout could be coming, and it could be a massive breakout. Cause, well, not a massive breakout. The break. Yeah, that's basically a 10% move that could be coming to 42. Is a 3% move, 3 to 10%, and that closes the gap. 3 to 10% move. Yeah, it could work. There's a decent amount of money on there saying that it could work. So, as you see it, but there's also a larger percentage saying that it's not going to work at the 37. So that could be a strangle. E. I like it for a breakout. Look at this. We are steady climbing, looking for the breakout of the 25. Yeah, there's nothing. This is nothing. There's no one trades this in options, which is kind of disappointing. How many millions? Oh, there's plenty of volume. It's just no one trades the options. They're option unfriendly, which is gold mines, because there's no one paying attention to them. So they're really cheap, really cheap. Because look at the implied volatility is 26. So this is even higher implied volatility than Sunoco, because Sunoco is only 18. But there's 187 people. That's not bad with a negative extrinsic value. Oh, well, yeah, that makes sense. Whoa, what is this, dude? They got last of 65 cents. So you're paying 7 cents, 6 cents of extrinsic value. That's not that bad. Um, does this stock have the can it move? Yeah, I mean, let's just go for these 3 days. Look at this. That's 2%. 2% brings us to 26.19. Nope, we're under. But what is this? 1, 2, 3, 4, 5. Let's see this. So that's a 4%. So let's see what does 4% do? 4% gets us to 26.73, and that's still lower. So than the next one out. So that's a no go. You see what I'm saying? 27.50. That's 27.50, and there's no volume. There's no money there. The money's right here at the 25, which is in the money, but it's not demanding. It sucks. So, all right, let's move on to KMI, which is another one, which is like, whoa, this is just like Sunoco and MMP. Um, Obviously, we just hit a high, but let's look where we're coming from. 11 to 19. That's not bad. Uh, this is a long-term play. Add up um, as much as you can. Let's look at the quarterly, kind of 20-year quarterly. This has a potential of getting up to 44. We break out of this 21, then really the 21 to 23 area, we're moving. If we're literally looking at this, the 21 is the 6-1 or the 161 extension. The 423 is 33. So this has, I mean, it has every bit of potential. If oil continuously climbs, this is all the potential in the world to get to its 44 or at least 25. So let's look at the open interest on this one too. I'm interested. So we got 12,000 contracts for the 20. Whoa. Look at this. There is a lot of money out there. I mean, there's a decent amount on the downside as well. So don't think, because what we got, 10, 11, 21, 28, 31, about like 32, 34,000 contracts on the downside. On the upside, we got 20, 24, 25, 26, about 26. So there's more contracts on the downside than the upside. Relatively low implied volatility. So that means that like two standard deviations, it's basically banking on two standard deviations to get to 20, kind of. Yeah, yeah. Hmm. Even the 1950s are cheap, man. They're 8 cents, 10 cents for the 1950s. And these are ridiculously cheap, man. Let's see. In 3 days, 4%. Ah, they're pricing it at like a 5% move. Because a 4% move only brings us to 1993. I forget how they're really cheap, but Kinder Morgan's not very. It's only $19. That's why it's really cheap. I forgot. 5% on a $19 stock is quite a big move. Well, it's not a big move at all. That means it's moving like 50 cents. Or you know what I'm saying? So that makes sense why they're really, really cheap. But KMI, another one. I would, like I say, I for KMI, probably like the Septembers if they're that cheap. Because look, even the September 20s you can buy them for 50 cents. And I mean, that's giving you 90 days. The 21s are what, 30 cents. So the 21, like, those are really cheap for giving yourself the gift of time, because you're giving yourself a lot of time that way. BP, I mean, you can't say it's not bullish, because I mean, on Thursday it hit a high. It's just like every other stock. If oil continually goes higher, look at the potential they have. They have a potential of getting to 79. They were that in October '07, 14. Oh no, this is 10. So they've been out of the graces for quite some time. But 52 makes sense. What is this? This is 2000. Oh, the 2018 they were a $44 stock. So they're 50% high. They're 50% under from the, I mean, you got to remember what the oil market looked like. But we're 50% basically to the 2018 oil, and we're almost there on the oil. So this has huge potential. I mean, you got to go a little bit more into exactly where they're making the money, but it looks beautiful for like a more of a long term, not daily. Total, with total, they what day is this? 6/9. Oh well, they're showing the chart today. On Friday, you had to been watching it. Oh no, they didn't, because this is 6/10, and Friday was not 6/10. So I'm thinking they are changing the ticker, because they didn't trade on Friday. And last but not least, Chevron. Chevron's just like BP. I do not see anything wrong with Chevron for the long haul. Beautiful. Look at the option interest on this. On the 110s, 51,000. That is a lot of money, gentlemen and ladies. We got another 12,000, another 10,000. Whoa. So this could be a spread. What, that 52,000 is kind of out in the middle of nowhere, right? 110. Yeah, that's right here. They're pricing in breaking to the 113, because this is the 120. Whoa. I don't see 120 at all. Let's see how much this can move. 1, 2, 3, 4, 5 right here. 8%. 8% gets it to 117. So as crazy as that sounds, it has the potential to run 8%. Wow. Wow. And that's this right here. There's 10,000 contracts out there, and that's 1 penny. Yeah, Chevron Corp, man. Let's see what happens. That's too it's too juicy. Too juicy. Way too juicy. Um for rolling the dice, it's difficult. I mean, you got 12,000 contracts, and you got 22,000 contracts that are costing like a dollar to $4. So it's kind of like pick your poison. All right, and that's it for our oil. As you see, let's check out how oil is running. So there we go. Last 30 minutes. Down, up, down, up. Looks like we're about to take off.